Hello everyone, hope you had great holidays. You better be preparing cause the market is crazy today. Almost all the 28 forex pairs opened with gaps. Gold hit almost 1690, oil down 5%, and Dow Jones down almost 1000 pips in one day. All because global fears from coronavirus. Now, before revealing today's idea, let us do a small recap about last week's video. Last week, we were bearish on the AUDM, and now price is moving down as expected. It should continue down to reach the target of the big channel. As we said, the first target should be the previous low at 72.6 almost, and the second target will be 75% from the total channel, as you can see, maybe at 71.8 or even 72 for the safe side. Now let's move to this week's trading idea. Today we're gonna talk about the euro dollar. Euro was down 400 pips in 2 months, especially with the divergence between Eurozone and US economy. Eurozone economy is more manufacturing driven, so it's more vulnerable to Chinese slowdown with the coronavirus fears, while dollar acted as safe haven and attracted investors. So speaking weekly chart, price is still forming new lows and reached 1.078, which is almost the bottom of a strong trend. Notice we have a gap here since 2017 in this area from 1.07 to 1.08. The gap is still not filled yet. Price should go to 1.073 again, especially if 1.078 is broken. Until then, we could see a retracement in the euro dollar. Let's move to the daily chart to see. Okay, speaking daily chart, we have an Elliott wave, inverted Elliott wave, 1, 2, 3. Third wave is finished, and now we are on the move for the fourth wave, which is a correction from the third wave. And then maybe you could go down to fill the gap. If you measure the Fibonacci retracement from the third wave, we are now sitting at the 23.6% retracement. First target should be at 38.2 at 1.09, which is the previous resistance support level. And if this price is broken, we could see an even more retracement to 50% Fibonacci. Draw the trend line here. You can see we might go to test it again, and it will be intersection between 50% and trend line. And after the retracement, we will be searching for a sell opportunity from these areas to target the filling of the gap, also the strong trend line, which is maybe about 1.075, this area. So in the near term, we are bullish on the euro, targeting 38 and maybe then 50. And on the long term, we are still bearish on euro. And if you check the RSI broke the 30 level, which is the oversold area. So this could favor our move for the fourth wave and then maybe for the fifth wave. So that is it for me this week. Thank you guys for listening, and I will see you next week.